Hello traders, the title of the video is how to forecast the end of the Elliott wave correction. Alright, so that's the $1 million, okay, a question, how to forecast the end of the Elliott wave correction. So you have been applying the Elliott wave, and there was a bullish trend that was followed by a correction. Now the question is, when will that correction end? Now very often what we see is that we have a trending phase followed by a correction. It will be very good to know when the correction will end. Alright, so I think you too should charge your advertiser, okay, £5 for a click for this video, because it's a very important question to know the end of the correction. Alright, to be honest with you, no one knows when the correction will end. That's the correct answer. But how can we have a bit of idea, alright, when the correction is likely to end? Alright, so there's no guarantee, there's no magic formula to pinpoint and say exactly here the correction will end, but there are various ways to have a bit of idea, which means to forecast. So the reason why I'm using the word to have a bit of idea is that traders do not think that when I'm using the word forecast, it means that it's guaranteed, that is exactly what's going to happen. All right, so I have a chart here, and traders always know that I'm on a monthly chart, my favorite time frame. I can do this exercise on a 10-minute time frame, on a daily chart, on the hourly time frame. It doesn't matter, because the Elliott wave cycle is formed of the trending phase. That trending phase is subdivided into 5 waves: first wave, second wave, third wave, fourth wave, and the fifth wave, without violating the Elliott wave principle. After the trending phase, we have what we call a correction. And as I told traders before, whenever you see a corrective wave or a Elliott wave pattern or a corrective wave pattern, you want to ask the right question: what is that corrective wave correcting? So the corrective phase is correcting the trending phase. So if you have been bullish all your life and you hate the bearish season, now that you have started learning about the Elliott wave, you'll understand that the bearish season are just part of the correction that usually follow, okay, a bullish trend. So do not follow the crowd that always criticize the bearish traders. That, oh, why are they selling? Why are they selling? Why anybody should sell? Just tell them that the market has a cycle, there is a trending phase, and there is a correction. So you need to know when to time the market. But today, our most important the question is to how to forecast, okay, the end of the Elliott wave correction. All right. So now here we are. We have here on my charts, we see the trending phase clearing it in the monthly. On the monthly chart, you see that very clearly. That's the trending phase. Okay. Do you disagree? Well, if you disagree, it means that you need glasses, or you need to learn more about the Elliott. So this is the trending phase for this talk. By the way, the financial instrument that I'm looking at here is Vicom Industry Incorporation. Vicon Industry Incorporation. EPIC, VII, Victor India. All right. It's an American stock that belongs to the industrial sector. All right. So here we are on the monthly chart. This is the trending phase. So at the end of the trending phase, as I show you on my drawing here, we will have definitely a correction. Definitely, by all means, which is what I like to call the harvest time. All right, harvest time. So we know different type of correction take place. You remember the 4 essential corrective waves. If you are using the Elliott wave, you must know the 4 essential corrective waves. What are they? Think of it. Have you forgotten? All right, we have the triangles, the flat correction, the zigzags, all right, and the combinations. All right, those are the 4 essential Elliott wave corrective pattern. There is a video at 24 Elliott wave YouTube channel talking about the 4 essential corrective wave. So after the training fair, we will be expecting one of those correction. All right. So I've already recorded a video. You can know how to focus on a zigzag pattern. So if a zigzag pattern is being formed like this one here, 1, 2, 3, we know that by applying a Fibonacci extension to the A parts of the zigzag pattern, are you lost? All right, the A part, the zigzag pattern is ABC corrective wave. This is the A part of the zigzag, the B part of the zigzag, and the C part of the zigzag. So when we are having a zigzag pattern, how do we know? Because the first part of the zigzag pattern will be subdivided into 5. 1, 2, 3, 4, 5. That's the warning, all right? That is likely to be a zigzag. We apply Fibonacci extension to the A part of the zigzag pattern, so probably you will see 1, 2, 3, 4, 5. You don't know what's going on, and then you see 1, 2, 3 here at the B part of the zigzag pattern. Then you say, all right, looks to me that we are having a zigzag. Okay, one step at a time. Then you apply Fibonacci extension to the A part of the zigzag pattern. We know, all right. We already know that the C part of the zigzag pattern, all right, can go down to the 200% Fibonacci extension level of the A part of the zigzag pattern. Can stop at 138.2%, 161.8%, but maximum 200% Fibonacci extension level of the A part of the zigzag pattern. So with that, we can have a bit of idea where that zigzag pattern can end. I have not finished here. I'm not trying to repeat what I've already told you. There are more in this tutorial, so I encourage you to stay with me, or as you always do. I know that I'm watching the watching time. All right, so thank you, traders. So we can have a bit of idea where the zigzag pattern will end. All right. Now the same thing if we have a flat correction. We have 3 various type of flat correction. The expanded flat correction. Okay. The running flat correction and the classic flat corrections. All right, so you want to know how to forecast the end of the C part of the flat correction. Once again, the flat correction is also ABC. Some traders may say, Joe, it's not ABC. I understand the reason why some traders may say it's not ABC is because when we are talking about the ABC correction, usually we are thinking of the zigzag pattern. So I understand, all right, but the reason why I want to say that the flat correction is also ABC is because it's from the 3. There are 3 components of the flat correction. So first part is 1, 2, 3. Second part 1, 2, 3, which is a double retracement, followed by the C part of the flat correction 1, 2, 3, 4, 5. All right. So we can also forecast the end of the C part of the flat correction. Now, in order to forecast the end of the C the C part of the flat correction, one should check, okay, whether we are having a running flat correction, a classic flat correction, or the expanded flat correction. All right. I don't want to change this video about flat correction. So that's one idea, to have a bit of idea how that correction will end. We also have sometimes a triangle. Some stock, I need to mention this, some stock will usually exhibit a triangle ABCDE, another pattern ABCDE. We are talking about the Elliott wave triangle 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 5 times. Okay, so some stock will always exhibit a triangle during their corrective. Some stock talking about the characteristic of a particular stock. Some stock will usually, which means 70% of the time, they will exhibit a zigzag. Some stock will always exhibit a flat correction. But I have not finished yet, because we're going to analyze this one here. As we're going to see now how things will become more complicated, because I'm now talking about the theory. We're going to go into practical mode very soon, and we'll be looking at this chart and see what's going on here. All right, so you may understand more. Okay, so you're learning now. We want to see the practice, and then you practice yourself, and then you master it. Okay, now let me drink my tea here. All right. So So we talk about the zigzag pattern, the flat correction, the triangles, A, B, C, D, E, all right? So those are very simple corrective pairs, all right? But I need to remind trader that the corrective, when we have a proper trend like this on a monthly chart, you do not very often see, all right, a triangle as a corrective, okay, pairs. You will see very often either a zigzag or a flat correction or a combination. Now, talking about a combination, which is the fourth type of corrective wave, all right? We are talking about combination. Either we have a tree, which is a double zigzag, or a triple tree, which is a triple zigzag, or we may have a flat correction, all right, and a zigzag, or a triangle and a zigzag. A combination of the first three types of corrective wave, all right? So it becomes a bit complex. So when we are talking about how to forecast the end of the Elliott wave, you will see very soon that as the correction is starting, very often it may start with a zigzag or a flat correction. So those are the popular corrective pairs after a proper trend. So the correction begins, people say, all right, we have a flat correction. Yes, George, exactly at 200% Fibonacci extension level of the A part of the zigzag pattern. Look at that. And I have a doji and a bullish candlestick pattern there. We're going to have a new trend. There's nothing wrong with that. Okay, there's nothing wrong with that. Yet at that point in time, that's what you see, and that's all you can work with. You use a top-down trading method and take it one step at a time. But it becomes more complex because you need to understand the reason why I'm recording this video today is because we, talking about Elliott wave traders, we tend to be more technical than fundamentals, okay, traders. So you want to understand that no new trending phase will begin without a strong fundamental. Now, that's talking about the financial instrument that we are trading, right? The second thing that you need to understand that we will not have a new bullish trend if the market environment is not bullish, all right? So you need a bullish market, all right, and a strong fundamental and strong fundamentals to have a bullish trend. You can have strong fundamentals, but if the market is bearish, you may not have a bullish trend. Okay, the opposite is also true. All right, when we are talking about bearish trend. Okay, so that's why sometimes technical traders, we see a zigzag pattern or a flat correction in place or a triangle. You are expecting a new trend. You see, this is the end, you focus it. So you focus it. You focus the end of your zigzag pattern of that correction that has begun in the shape of a zigzag. You focus it. It's there exactly at the 200% Fibonacci extension level of the A part of the zigzag pattern. That's it. You focus it. But is that the end of the correction? So you have to understand that the title of the video is how to forecast the end of the corrective, the end of the Elliott wave correction. But then the correction continues, which means market environment probably was not good, or fundamentals are not supporting the new trend. So the smart money will continue to sell, though technically speaking, you as an Elliott wave trader, you focus the end of the correction, you write an email to your client, you are very courageous, you say, now I recommend that you buy this stock because it's now oversold and we are likely to have a new trend. So probably you were here. For this stock, you were here, you told your client to buy. So since 2009, your client bought this stock, but the correction continues, all right? So your reputation is under pressure because you told client to buy stock in 2009, and still 2017, the stock continued to go down. So it went up a bit here. Some even bought it here at the top here, and since then, it's just going down, 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 down. All right? So when will that correction end? Remember what I said to you at the beginning of this tutorial is that no one knows when the correction will end. But we can have a bit of idea when the correction will end. We can forecast. So when we say forecast, we want to have a bit of idea where the correction will end. But then the trick that you need to use practically, okay, using the Elliott wave, is that when you use your Elliott wave to forecast the end of the corrective wave, put it aside and say to the client, okay, now technically speaking, that zigzag pattern supposed to end here in normal condition. Now we need to wait for a viable market environment and with a strong fundamental before we can buy. This is about, you remember, it's about timing. So you want to time the market correctly. So you are using the Elliott wave, you are checking the market environment, and you are performing Google Asset test, you are checking the financial, you are checking the economy news and the competition. Now, recently, you know that company AMD in competition with NVIDIA was downgraded because of the competition, and the share went down because Goldman Sachs was telling clients that AMD will struggle with the competition with NVIDIA. So those kind of talking about competition will have influence on a company. So you want to go to Google Finance, okay, check the related companies, which are the peers of that company in that industry, all right, and what kind of relationship they have. Those kind of things will influence how you forecast the end of the correction accurately. So it's not all about using the wave pattern, but it's to be more intelligent investor, combining the Elliott wave, the market environment, all right, and the fundamental. But I have not finished here. You say, George, I know all this. But we can also use Fibonacci. So I'm going to do the demonstration now, how we can use Fibonacci also to help us forecast the end of, all right, the correction. Are you getting it now? So, by the way, thank you, traders, for watching our videos. I really appreciate that. Otherwise, I will not be recording a video because I don't want to waste my time talking to myself, okay? So, I appreciate it very much. Okay. All right. So, now let's start with this stock of Vicon Industry Incorporation, Epic VII. So, we can see that we have a trending first here. And then, without too much blah, 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 you see it went down here. Am I zooming into it? Now, I find it a bit tricky to zoom into this chart because before, I can move the chart side by side like this with my arrow. And now when I do that, all I got is this. But before I can do it, because I was using this, I was not using the software. I was using it in a browser. Now, I can't use it in a browser anymore. So I'm having a bit of difficulties to zoom into this chart. Now, if you know how I can do that with this one, let me know, okay? So then it bounced up a bit and then came down. So this is 1, 2, 3 in the shape of a zigzag. Now we can go and investigate, okay, the internal wave of this price action here, and the internal wave of this price here, and the internal wave of this action here. But the shape of this correction is a zigzag. All right? It's a zigzag. I don't want the video to be too long. I can try to apply, okay. Let's see. Fibonacci extension to the A part of the zigzag pattern. And you can see that it stopped at 138. 138, talking if there's one tail here to 150. 150, call it 138 because it's only 2 candles T-bar that touched the 150. So 138.2% Fibonacci extension level of the A part of the zigzag pattern. So when we were here, so you will say probably this is the end of that zigzag pattern that been formed, because now you see a consolidation. You see, George, this is exactly what you said about the Elliott wave count guideline consolidation breakout. You see, so when you were here, all right, so you'll be saying, all right, the correction has ended. We are in 2008, 2009, the S&P 500 is start galloping, going up. So you say, Joe, probably this is the first Elliott wave. Now, at that point in time, that's all you can say. First Elliott wave, market is becoming bullish. So the second Elliott wave should not cancel the first one. Here it is, it cancelled it. So when you see the second area wave that is now cancelling the first wave, you'll be thinking probably it will come back above it, which it did, above that low of the first wave. So it came back above, breaks above, retest. So if you were here, you will say, okay, what George said was that when the second area wave cancel the first wave, one should restart counting the wave. So you'll be positioning yourself here, expecting a new area wave to start here and the trend to continue. But it's not happening. So the correction that has started as in the shape of a zigzag, 1, 2, 3, followed by a consolidation, is now being extended. Even up to today, the stock continues to go down. So that correction that has started since, all right, 2007 is still going on. When will that correction will end? All right, that is the question. So, all right, so you see now, so to keep a long story short, there's one trick that I will share with you, or I know you have been very patient with me so far, but I will share with you and then we'll go a little bit more. All right, one trick that you can use, which I talk about at dayprotrader.com, you will apply the Fibonacci extension to the trending phase. And then you will highlight the 138.2% Fibonacci extension level of the trending phase. So below it, so it's going down, you want to see it down here, the 138.2% Fibonacci extension level of the trending phase. Why? Because it's based on the market stable data. All right? Because the correction here is a down move, yes or no? All right? So for the bearish move to continue, if the price break below the prior low, the next challenge for that bearish momentum is which level? The 138.2% Fibonacci extension level. I don't know how it works, but this is true in the financial market, and we can work with that. So all you need to do is to apply Fibonacci extension to the trending phase and to highlight the 138.2% Fibonacci extension level. Now, if you are not a subscriber of dayprotrader.com, I told traders that whenever they are applying a Fibonacci extension or Fibonacci retracement, they have to understand that not all traders, use the Fibonacci retracement and extension the same way. So some traders will place it from the low to the high, some will use it from the closing price to the closing price. So as I put it like this to the top, you can see that I cannot see my 138.2% here. So because I'm on a monthly chart, sometimes I have to go probably to the quarterly chart and it may be there. Where is it? It's not here. Because I can't see on the quarterly chart, I will go a little bit further down on the higher time frame yearly chart. It's not here. I can't see my 138.2% Fibonacci extension level. I need to see it. I want to know where it is because that's the ultimate target for the end of the corrective phase. That's ultimately, all right? So you have to understand as I start recording this video, I say to you that we want to have a bit of idea where the correction will end. This is about forecasting the end of the correction. But I also told you that, to be honest, all right, no one knows exactly when the correction will end because it's all depending on the fundamental, the market environment, and also the technical analysis. But now that I can't see it, let's go back. So you're going to face this challenge when you start applying this. You may be saying, where is he? That's why I'm doing this exercise in front of you. So you go back to the monthly chart again one more time. And now we want to push it back down to the closing price because we know that not all traders draw their Fibonacci through the same way. So now I push it to the closing price on my monthly chart. And now I'm going to do the same thing, go to the quarterly chart. Where is my 138.2% Fibonacci extension level? It's not here. All right, let's go to the yearly chart. One more time. I can't see it. Now, what should you do next now? You see? So you can't see it because you start from the monthly chart. That's your setup time frame. You are counting your wave there. Now you apply Fibonacci extension. You can't see it. There's another thing that traders do. All right? So we talk about it. Some traders for Fibonacci, they place it. All right, from the top to the low, some at the closing price to the closing price. But you have to understand that on a monthly chart, we were applying the Fibonacci extension. on a yearly chart, it's a different thing. So now I'm on a yearly chart, you see. So we try both methods to place our Fibonacci retracement on our monthly chart, and we can see our 138.2% level. I have done my homework. If you put it now at the closing price on a yearly chart, here it is. You can see it now. Can you see now? Yeah. Now on the yearly chart, I draw my Fibonacci extension by putting it at the closing price to the closing price, because I don't want to waste your time. And you can see that now I can see my 138.2%. I hope you can see on your chart 138.2 where I'm moving my cursor, 138.2% Fibonacci extension level, and that's where we are now. So by placing my Fibonacci extension not on the yearly chart, not on the monthly chart, but on a higher time frame like a yearly chart, now I am able to see my 138.2% Fibonacci extension level that I have deducted from the the trending phase. We are applying it to the trending phase. So that's the line there. But in fact, you can see that it's showing minus, but the price cannot go to minus, price cannot go to zero, in fact, but you just leave it there where it is. Just leave it there. And if it's showing minus as it did here, just ignore it and understand that it's not useful for us because the price cannot become negative. All right, it's a positive number, so it can't go negative. But just leave it there. Practically, we can just pay attention to it, but we know that it's not useful to us, and the price cannot go below the zero level. All right, but you just leave it there. Okay, just leave it there. All right, so we can see now that the price is now at the if you agree, you see now it's now at 138.2% Fibonacci extension level of the trending phase. So let's go back again to the monthly chart. We are talking about how we can forecast the end of the corrective phase. So remember that we have clients, and on YouTube, you are my client, all right? Don't take it serious, all right? Don't take it too serious. All right, don't take it. Because I'm trading, I'm more experienced than me, don't take it too serious, okay? Joy, who are you to tell me that I'm your client? All right. You know how long I've been trading in the financial market? All right. Now, don't take it too serious. Okay. So now, remember that everything has started on a monthly chart, and we have clients. We want to tell them what to do. So what you need to do, as you see here, you say, zigzag pattern has ended here. It's likely to end either 138.2%, 161.8%, and maximum at 200% Fibonacci extension level of the A part of the zigzag pattern. When you were here, you see the shape being formed. All right. So you told your client, they are aware of it. The next thing you need to tell them is to apply the Fibonacci extension as I did now. You can see that from the yearly chart, it looks like we cut corner, but now you see on the monthly chart, price went up, but closed back down. But on the yearly chart, we ignore the shadow on top of that candlestick bar. That's why you can use also, instead of you use drawing it from the high to the low on one time frame, you can go also to another time frame to apply your Fibonacci extension level. So one more thing that you will tell your client is very important is that, look, apart from those Fibonacci extension level that I already mentioned to you, the ultimate target for the end of the correction is the 138.2% Fibonacci extension level applied to the trending phase. That level is almost near the zero level. That this stock, if the fundamentals are not improving, and if the market sentiment does not improve towards this stock, is likely to go down almost near the zero level. So you will be ready to tell your client since 2008 what is likely to take place. You will be quoting the level of 138.2% where it did stop first time and bounce up a bit. You will quote the 161.8% for the end of the correction. You will quote the 200% in relation to the A part of this zigzag pattern, but you will also give them a warning and say, look, if things are not improving, they are losing market share, if they are not coming up with excellent product, then this stock can go down almost near the zero level. So you can just put it there at the bottom, big warning, all right? So they are cautiously buying the stock. Do you think that will be also useful in this case to forecast or to have a bit of idea, when that correction will end? So the question I have for you today, will the correction end here now? I will say yes. Why? Because the stock cannot go below zero. Now, does it mean that we should just go now and buy this stock because it can't go near zero and the only way is up? Before one can buy this stock, one should go to where? www.google/finance.com or Yahoo Finance. Check the fundamental, perform Google seed test, all right? Check the management, check the product, all right? What's going on? Why so far since 2008, the smart money doesn't want to buy this stock? There must be a reason. What's going on? Okay, I don't know, all right? You'll find out if you want to buy this stock and hold it, all right? It's up to you. But it doesn't mean that when a stock is cheap, one should buy and hold it, okay? Okay, by the way, this video is for educational purposes only. It's neither solicitation or an offer to buy or sell, okay? Vicon Industry Incorporation is for educational purposes, showing traders how to forecast the end of the Elliott wave correction. All right, so we can go a little bit more, okay? But I've been talking to you now for some time. But if you look carefully here, there was a 1, 2, 3, and then this bounce up, and then you can see again here. After this bounce up, we have again 1, 2, 3. That looks to me we have a kind of a zigzag pattern that been formed. Well, I know that zigzag pattern has been formed here. All right, all the way down here. You can see here when we were here. If you look careful, where are we? Yeah, down and it went up to here. Okay, so 1, 2, 3. Consolidation bounce, all right, and then you can, in fact, here you can see this one here. If I hold on, please. I hope you can see this on your chart because so you can see here 1, 2, 3, and then we have again 1, 2, 3. All right, do you agree? And then it came down 1, 2, 3. All right, and then it tried to bounce up again here. Try to bounce up again here. Color that one into red. All right, and then we have again 1, 2, 3. You see, it's just doing 1, 2, 3, and it's not bouncing back up again. You see, it's just 1, 2, 3 again here. All right, again down. All right, and again here. Look out for here. It's just doing 1, okay, 2, all right. Look at that. Look at this one here. That candlestick bar. You see here, this candlestick bar, how they push it up a bit. It's again the 1, 2, 3. All right. So the correction just keep going. Now again, here it is. They bought it again. Here you see how this one also went up again. It's just 1, 2, 3, 1, 2, 3, 1, 2, 3. A lot of zigzag being formed, and the correction just continues. But you can see now it's almost near the zero level after all the 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3. When will this correction end? It's a complex correction. It's a combination of many zigzag patterns that have been formed. So when we are talking about correction, Elliott wave correction, one should not think only about the zigzag or the flat correction or the triangle. We may have a complex correction, which can be a combination of many zigzag or a combination of zigzag, triangle, flat correction, all kind of messy correction, sharp correction, okay, and so on and so on. But talking about how to forecast the end of the Elliott wave correction, we can forecast the end of the Elliott wave correction by forecasting the end of the C part of the zigzag pattern, the end of the C part of the flat correction, all right, and also we can use, okay, the Fibonacci extension applied to the motivate itself, which is the trending file, and we want to highlight the 138.2% Fibonacci extension level. That's where the stock is at this stage. Now, the next step, if one wants to buy the stock, is go to Google Finance, perform Google seed test. So, to summarize the video, in order to focus the end of the Elliott wave correction, one will use, okay, the wave patterns, all right, and also the Fibonacci extension level. By using the wave pattern and the Fibonacci extension, one should not ignore that the the stock will not rise, will not start a new bullish trend if the market environment is not bullish and if the fundamentals are not improving. It's just very important to don't be like a new trader. If the fundamentals are weak and they are not making money, they are crashing under the competition, all kind of bad news, poor management, and so on and so on. All right. There won't be any trend, even if we see a beautiful, gorgeous double tree, triple tree, and the market will sell until a new management start making money. All right, that's very important. All right, but with the area wave theory and the wave pattern, talking about the zigzag pattern, the flat correction, the triangle, we can have a bit of idea where the correction will end. But the ultimate end of the correction is the 138.2% Fibonacci extension level of the motive wave. We need to tell our client to be aware of that level, which is below the cycle point. The cycle point is the level where the trending phase has started. So here it is. If they cancel, if they bring it all the way to the point where the trend has started, it means that it's a double bottom chart pattern, equilibrium level. Normally, people who bought it before will be willing to buy it. But now if they reject it, they don't buy it at that level, as you see here, we were at the cycle point here. It's a good place. You see people responded. Some people joining here and bought it. Again, you see pull back a bit, a little bit below, and they push it back above that, a cycle point. But again, they continue to sell it. If it did below that cycle point, which is another level we need to retell, our client. So apart from the 138.2%, 161.8%, 200%, talking about the zigzag pattern, and also the end of the C part of the flat correction, we need to mention to our client the equilibrium price level and say, normally, sometime, some stock will always cancel their whole trend. So some stock, they have that characteristic. Every time they start a trend, the price goes up. And so which means they are consolidating in fact, They bring it back to the starting point, and then a new trend begins, and the same, they sell it again, they bring it back to the cycle point. So you need to mention also that cycle point, which is the point where the trend has started. And beyond then you will tell them below that level, if there is room, because if you go into negative price level, it becomes useless. You can't use negative price. So you will say, all you can say to your client is that in the worst case scenario, it can come quite close to the zero level, which means this stock may become a penny stock, all right? And then you put a big warning there to your client, all right? So this is the end of this tutorial, talking about how to forecast the end of the Elliott wave correction. All right? If you have any question or suggestion, all right, put it in the comment section. And in due course, I will be busy, recording another video to clarify your question. All right. We are the TSTW24 traders talking about how to forecast the end of the Elliott wave correction. If you like this video, please give us the thumbs up. If you dislike this video, I want to know, please give me the thumbs down so I know that this one is another blah 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 from my side. So next time, I don't repeat myself. All right. Happy trading to you all, and speak to you soon.